with DTC Coaching. I'm here on Friday for a Friday group coaching session, and I'm here to inspire, to help promote, to build your confidence so you can take your trading to the next level. Listen, today we're going to be speaking about how to develop a profitable trading strategy, how to be a great day trader. Today's information is not going to be nothing mind-blowing or nothing new that you heard, but I believe there's some fundamental principles that every trader should be doing on a consistent basis so they're going to have consistent earnings throughout the week. Now, this week was a kind of so-so week, but, ended the week green, and I'm going to be transparent with you guys. Now, today, if you guys are trading, if you got out today green, you did great. Because listen, this morning I started off trading. Dude, I had 3 losers in a row. I don't have 3 losers in a row, ever. I'm playing my edge. Now, I got my edge. I break the VWAP, I break the moving average, I break the daily high or low. Them things wasn't working this morning. I was in chop zone. I got a little frustrated, but I didn't get frustrated. So what I decided to do was start drawing my areas of chop, say I'm not going to trade it, and I disappeared. If you notice, I got off the mic today. That's a sign of discipline. But I knew that sometime it was going to break during the day. Now, on Fridays, guys, there's all of them just a hit. Some people don't trade on Fridays, and that's okay. But I find that I have my biggest days on Friday. So guess what? By the end of the day, it broke around 11:30. They had to start having this big old run up. You guys may have caught it. I missed it because I wasn't paying attention. But I knew something from my trading is that I was not going to chase the market. You heard that, right? I was not going to chase the market. So what I did, I waited. And I'm hoping that when it gets to the top, it's going to turn around. And guess what it did? It retraced that whole move we had today. And when it got to the very top, guess what it did? It sent me a signal. What was that signal? A big old wick of rejection. I said, uh-oh, here it comes. And guess what I did? I didn't trade options. I did trade futures. I laid on my trade and I took 25 handles at the end. I said, whoop, and look. Now, I was already green because I made up my small loss earlier in the day, but I became real green because I had patience and I didn't trade the chop and I stayed with it until the end. And guys, if you have anything, this is a value to you, has nothing to do with the training today, but watch the 30-minute cycles. That's all I could tell you. Bottom of the hour, this is the hours. I'm going to give it to you. Write it down. If you're on the East Coast, it's 12:30, 1:30, 2:30, period. Okay? No, 1:30, 2:30, 3:30. I think you get, the last 3 hours of the day. At the bottom of the hour, they always have this big move. It started at 11:30 today, my time, California time, so that would have been 2:30 East Coast time. And then it peaked out, and then it started running off at 12:30 the other direction. So if you know them things, and you know me, I'm a 30-minute trader, you probably made some money today. If not, then get with somebody like myself that possibly can help you trade and become effective at your trading. So let's get started today. Our trading is going to be done, and we're going to be speaking around the area of building a successful trading strategy for yourself. A successful trading strategy for yourself. And again, guys, it won't be nothing brand new today that you're going to have, but it's going to be some things that I believe is going to make a difference in your trading overall. Okay, do not really have their own trading strategy. What that means is that they come into the room on the trading room on Monday, Tuesday, Wednesday, whatever date that is, and they start to trade and they try to see what everyone else is doing and say, what are you doing? Okay, I'm going to do what you're doing. And I think that's a dangerous place to be, but it's beneficial too, because when you're trading along other professional traders that has made the leap to become a consistent trader, a profitable trader, and you can hear what they're doing, you have the ability and you have the opportunity to take and make your trade successful because you're trading along with them. If they're doing it correctly, like calling out the trade before they get ready to take it, so that when they call the trade out, they're not push the button 3 minutes ago and say, oh, I'm going long, and then you try to get in and then the thing pull back and stop you out. So having your own trading strategy, I think, is essential for the trader. And if you don't have yours yet, then hang around long enough with me and you might get a chance to get you one out of this here. So I'm going to give you some fundamental truths that I think will make a difference for you. So how would you develop your own trading strategy? First thing I would say to you is that you have to make sure that you have a clearly defined goal and a plan for your trading every day. So when you approach the market, I want you to make sure that you have clearly defined your goals. You clearly have a plan and you know what that plan is and you're going to stick to it. That means, see, your plan is your strategy and your plan is your guide to your trades. So you don't be like a lot of traders out there and I'm going to say this word because I'm from down south, doing these willy-nilly trades. I mean, they're just throwing it against the wall and hoping to stick. You don't have to be that person, because if you have a plan and if you have already put together your strategy, then you will know exactly these three things here. First, you would understand and know how much money do you intend to extract from the market every day. Okay. Now, I don't have an income goal in the sense of I got to make a certain amount of money, but I do want to make sure I make at least $2,500 a day. All right. That's my goal. Okay. That's my goal. Now, if I don't make $2,500 a day, then I'm fine with it. But if I do, then hooray. And today I made my target. I got my 2,500. So today was a great day. Now, and I'm not saying this to brag, guys. I'm not saying this to brag, but that is my goal. Now, some days I make 500. Some days I make 300. Some days I lose 100. Some days I lose 200. But I don't lose a whole lot because I'm one of them guys that I date the market. I don't get married, meaning that I'm only going to be here for a little while. If you're not treating me right, I'm out the door. I'm gone. So make sure that you have a plan to take money from the market and not be giving money to the market. That helps you stay sound in your trading. It helps you develop a discipline to not hold on to losing trades. How many of you guys right now in this room today, have found yourself in the past, hopefully not today, holding on to dead wood, meaning that the trade is going against you and you sitting there hoping the trade come back forward and going to help you get into the trade? If you say me, put in the type box. And it's okay, guys, in the chat box. We're in this together. So I've done it. I've had losing trades, lose thousands of dollars, and I see it going down, going down, going down. And all I had to do was cut the trade in reverse and go another direction. Because one thing I've known as an experienced trader now is that the market is either going up or is it going down. If a trade is going down against you and you're long, then you must have enough discipline to say it's not about me being right or wrong. What is the market doing? And I want to go along with the market, so therefore I can extract money from the market. Okay. Someone said that it happened to them today and they got tired of being a chicken and finally took the trade and went against them and most of the day get it out of red. And that's okay, guys. This is what I want you to know is that when you're trading, in your discipline, if that trade for some reason is not going in your favor, cut the trade. It's not about you being wrong. It's just that the market wasn't ready to participate. And if you have the insight and the ability to take and just reverse the trade, now I'm going to talk about that, and I'm not going to get too deep into this. It's going to be we'll cover one of the other sessions. Is that always trade with the trend? That's going to help you out. Never trade against the trend. If the trend is bullish or the trend is bearish, always trade the direction of the trend. So when it have a pullback or it has a bounce and it's a bearish market, wait till it gets to the top, starts to do its heavy wicking, then you take the trade and go short. Then you wait for it to happen again, and it's called rinse and repeat. That's a way to help you out because now you have a plan and it's part of your strategy on how to extract money from the market. Okay. The second thing I would say to you is that you need to know how much money you need to get started. Now, this is a hindrance for some people and some people it's not. I've talked to traders where they have $500 to get started. I've talked to other traders where they have $5,000. Others have $500,000 to get started in trading. Now, caveat to the new trader. It doesn't require you to have $500,000 or $100,000 to get started trading. It does not require that. What it requires is a discipline and it requires a plan. It requires a strategy and the clear expectations on your clear understanding of your edges that you're going to take. Okay. So another thing would be is to determine your risk tolerance. What does that mean? That means that if you have a $5,000 account, you don't have a tolerance to have a risk or drawdown on your account of $1,000 a day, because that means in 5 days, you'd have blown your account. So therefore, your risk tolerance can't be the same as a person that has a $50,000 account. So what is your risk tolerance? I would say to you that a 1% tolerance for a big account, $25,000 or more, or 2% at the most. And if you have a $5,000 account, your risk tolerance, I'm just going to say it, may have to be 10%. Oh, Calvin, hold down. Yeah, because think about it. If the average trade you take and you buy a contract and it costs you a couple of $100s for a contract, let's say it costs you $400 to get into a trade. Well, 10% of $400 is what? $40, right? So if 10% is 400, 10% of 10% is $400. If 10% of is $40, then if it comes against you, the average trade, if you have 5 contracts on that, would be really easily hit. So it's going to be, you may have to have a little bit more tolerance for it, but then you have to have a clear discipline on when you're going to be your entry and your exits for your trade. So then what do you need to begin trading? First thing I think you need to do is make sure that you're going to have your plan in place. I think that's going to be key for you. So let me put it this way here. You're going to need to have a strategy, okay? And I believe your strategy is the cornerstone to your success. What does that mean? That means that I've looked at the market, I've studied the materials, I understand my personality, my style. What is my strategy? My strategy is like, for me, I'm a 30-minute candlestick trader. So that's a strategy for me. I'm a level trader. That's my strategy. It's all put together. I'm a price action trader. That's my strategy. So because that is my strategy, then therefore, when things does not line up to fit my edge, because my edge comes from my strategy, because I have a clear expectations where I'm going to get in the market. I have a clear expectations on the amount of risk tolerance I'm willing to accept. And if these things don't line up, I do not take the trade. So what are we going to talk about here? Developing your own profitable trading, day trading strategy is going to be this. So the first thing I would say to you is that you need to select the market that you're going to trade in. What does that mean? That means that if you're going to trade futures, then let that be a market that you're going to study and understand how it breathes and how it moves. Because every stock or every index that you trade, or Forex or crypto or whatever it is that you may be trading, has a certain rhythm and a pattern movement in it on a daily basis. Now, why is that developed? Because it's traded by millions of people that are putting in orders every day, and it becomes what we call a herd type mentality. They have certain emotional biases or disciplines about themselves. And most of us, now think about it this way here. One of my trading edges is, my strategy is working with the 50 DEMA. So if I use the 50 DEMA, there's probably about a couple of other million traders are using the same edge. So when I take a trade at that level break, they're taking a trade at that level break, and that's called breakouts. That's how it happens. When you get enough people doing the same thing at the same time, the market responds with a movement. So what you're going to do is understand the market that you're going to be trading, understand the commodities you're going to trade. And this is a caveat for you. If you're trading 25 different stocks or 25 different tickers or different things that you're trading, you can't master them all. You see, you can be a jack of all trades and a master of none. So pick a few stocks or indexes that you like to trade that has a certain pattern to them that you can kind of work with your trading style, and only trade them. You want to find something that is going to be volatile, and that's why I trade SPY, XPX, and I trade the ES futures. They're very volatile markets. The other day we had a $150 move. That's the kind of stuff I want to trade. Now, if you don't trade them commodities, them indexes, and they start to move like that, you jumped in, you may have not made money. Because the funny thing about it, in that move, I made good money. And do you know, a lot of traders I spoke to didn't make any money, end up red on that trade? How about you guys? On that $150 move yesterday, How many of you guys made money? You don't have to say yes or no, but did you make, was you green or red on that day of that move? Or type in the chat box. It's okay. You're in a safe place. This is where your help coming from. Flat. Johnny was flat. Okay. And green, small green. Okay. And now I asked that question, and it's okay, guys. Listen to this here. The reason that I was able to capitalize on it because I understood my strategy, I understood my style, and I was able to look and see when my edge was met, and I pulled the trigger at the right time to get in and get my piece. Now, this morning, we had a response going on the market where the market just sold off. And when the market sold off, guess what? I was already in the trade, and I had a profit target on it, and it hit my profit target, then ran another $50. I'm like, good doggone, but I couldn't get back in and chase it. It happened so fast. But the thing was, I was in the right place at the right time, so I did get a little piece out of it this morning before market opened up. Okay. The second thing is make sure that you have a time frame that you will trade on. This is for you new traders here, and hear me out. A lot of traders trade 1-minute candles, scalpers, 3-minute candles, 5-minute candles. Most people don't trade 10, but some people trade 10-minute candles. And for a new trader, it's harder to trade the smaller time frames. Okay. I would suggest, and it's just me speaking, pick a higher time frame, the 15 or the 30-minute candles. What that means is that there's going to be less movement within the candle. You're going to be able to process the information better, and you won't have to take as many trades because in a trading day, there's only so many 30-minute candles. And if we're trading 6 hours, then that means there are only 12 30-minute candles. So you only can trade 12 times a day, top and bottom of the hour. That costs you nothing. That's free. But once you start to figure that thing out, then your risk would be smaller. The amount of trades you're going to take going to be less. And you're going to find yourself making runs on 15, 30, 50% runs on a trade. But you won't trade as many times. That's a free one for you there. Now, if you're new, I would say find a strategy, find a time frame that works for you, but I would suggest a higher time frame. It may help you out. Try it for a few weeks, paper trade it, do back testing strategy on paper and see if it works out for you. You may find out that you'll trade better because what I find out that them 1-2 minute counts, they move too radically and you get so emotionally wound up, you make mistakes. Okay, that's a free one from DTC Coaching. Okay, the next one is select your trading approach. Now, for me, my approach is levels. You may hear me speaking when I'm trading all day long. Okay, we're reaching the 50 moving average. We're reaching the VWAP, or we're reaching the break of the day, or week, or month high. They're very important for me because of the fact that there's a lot of people around them areas, day high, day lows, weekly, monthly highs and lows, are protecting their positions. They're looking to get in or sell at the positions. Being that I know that information, so I wait till price gets into them areas that lined up with my time frame, talking about candlesticks, right? And levels combined with my 30-minute strategy, it gives me an edge. So if I know, like today, I knew that once we retraced that move down, we was approaching it, was possibility, it wasn't guaranteed, that it was going to get rejected and head back down. So I waited patiently while that thing ran up and ran up. And I mean, I almost chased it, guys. I almost wanted to take a trade, but I did not do it. I stayed out of it all the way from what it was 40, I forget the number, 40, 60 something area, all the way back up to the top, right? And when it got there, guess what it did? It wicked, it came down. Being that I understood that, my approach to the market, soon as it touched the top, soon as it started wicking, I took a long and I put me a 5-point stop. And that thing went down and just kept going. And I took 25 handles. Now, 25 handles is 25 points off of the trade. That made a big difference in my trading day. I ended with a great Friday. The next thing I'll say is that clearly define, this covered that, clearly define your entry points. The next point is, this is important to you, clearly define your exit strategies. Now, what does that mean? That means not just your stop, but where you're going to take profit at. I've seen this happen time and time again. With a new trader, they go in, they take the trade, and they have no clear expectations on where they're going to take profit. So the trade moves up on them and is moving up really good, and they're getting excited, they're making money. Then it starts to pull back, and it pulls back, and it gets to a place where they're uncomfortable with the pullback, and they feel like fear of missing out, that they lost the money that they made. Let's say if you had a 80% gain on a trade, then it started pulling back about 30%, get the 50% mark, and you have an idea to cut the trade, but you say, no, it's gonna come back, it's gonna go back up because it's just a pullback, and then it end up keep going back, you hold the trade, and you end up on a red trade. Have that ever happened to anybody in this room today? I'm gonna put my name in there, I'm gonna say, yes, it has happened to me. Anybody else? Anybody but me today that's possibly had that happen? Yep. Yep. One says all me, all, yep. All. And the thing is, guys, it's not foreign. But see, when you have your strategy in place and you have a clear, this is my goal, my profit target. I'm going to give you a key. This is the tip. Whenever you take a trade, if you're going long, that's a bullish trade, look to the left and find the first wick of the candle to your left at the top. That's your profit target. When it gets there, guess what you do? You either take profit because it could hit that area of resistance, because every candle stopped because of resistance, okay? And if every candle stopped because of resistance, then you possibly going to be stopped out at that resistance point. So take every trade, have a target, and if it breaks the resistance part, guess what you do? You move your stop to that area and let it keep going, and that's your new stop. And if the market come back, don't you ever, I'm gonna say it again, don't you ever move your stop. And let it stop you out and you take your profit. Do not ever give back your money to the market that it has given you. You earned that money. You paid the right to be there because you put the capital in. You was willing to accept the risk. The market said, I'm going to give you the money, and you keep your money in your pocket. Okay, so clearly have to find your exit points. What does that mean? I'm going to have stop losses in place. I'm not going to have a line drawn across the chart. Now, I'm going to tell you guys, do as I say, do as I say, not as I do. I don't have stops on most of my trades. Why? Because I have the discipline to cut. That is no good for a new trader. That is no good for a new trader. You must have a hard stop set in, automated stop in your trading. So don't you ever take a trade and do not have a stop. Now, this is a problem. There's a strategy for setting stops. You can't just set a stop. Stops have to be strategically placed because certain stocks need so much room to move. I'm going to give you a free tip. What I have discovered, if I'm trading SPY, use that one. SPY has a tendency when it starts a new candle to pull back in the opposite direction about 10 to 17 ticks on a 2-minute candle. I'm going to give you a strategy. Cost you nothing, but it may make you a lot of money next week. So on a 2-minute candle, when it starts and you made your decision to trade it, let it pull back, and it's going to pull back about 10 to 17 ticks. You need at least a 25 tick stop. That means that you're going to risk $25 per contract. If you hesitate, that you're going to need $50 per contract because it pulls back pretty often. But the thing is that if you use this strategy and do it without hesitation, without emotion, be robotic, when it has met your edge and you use a 2-minute candle for your entry, make sure that you have time frame continuity going with you. What does that mean, Kelvin? That means that make sure that the candle that you're going to be entering on is in the direction, moving in the direction that you want to trade, and has closed. Okay, I'm going to say that one more time. Has closed. And when it's closed, the new candle come out, it breaks the threshold of, let's say it's a bearish play, the low of the previous candle that closed after you made the decision to push the button, then you take the trade. That's called time frame continuity. That right there gives you the ability to take the trade and not get stopped out. Most people, not most people, a lot of new traders will take the trade and the candlestick is actually going against them. And guess what happens? As soon as they push the button, they get stopped out. Or some traders will get in the trade and they'll say, I'm only going to risk $10. Well, if the commodity or the stock or the underlying that you're trading requires 15 ticks to work itself out before it runs, then each time you push the button with a $10 stop, you just say, market maker, just take my money. And if you're going to do that, just write me a check. My address is 555 Winchester Avenue. Send that check to me because you're just giving the money away. So clearly define your risk, your stops, where they're going to be. All right. Clearly define your profit ticket targets with your exit. What does that mean? That If it hits this number, whatever that is in the future, I'm taking profit. With a small account, guys, your job is to take profit. I don't care if it's 1%, 2%, 3%. Don't you ever let a green trade go forward and come back and make you red. That's called greed. That's called FOMO. That's called fear of missing out. Don't do it. It's not your friend. Green is your friend. Red is your enemy. I got the red shirt on. I'm not your enemy. I'm not your enemy. I'm not your enemy. But make sure that when you're in profit, if you take a trade and that trade goes green and you come back and you in red, it's your fault. Okay? You can't say the trade didn't work. You had poor risk management. Okay? Poor risk management. That's your fault. So make sure you have clear exits on your profit and on your stops. Now, some of us would like to stay in the trade longer, but don't really want to stop themselves out at a profit. Then I would suggest you use trailing stops. If you don't know how to set them up, if you use TOS, that's think or swim, you can set up trailing stops. So therefore, if the stock moves up, let's say 20 ticks, and then you can say start trailing at 20 ticks. And as it goes up, it will keep moving your stop further and further up past your entry. And if it comes back, it has the discipline for you to stop you out the trade. Therefore, you can make as much profit as you want without setting a profit target, but yet not lose the profit that you did gain from the market. The next I would say to you is that make sure you're in position to scale. What does that mean, Kelvin? That means that if you're trading, let's say SPY, and I'm just using that as an example, that's something I trade, and you trading 10 contracts, make sure when that trade goes up 25, 30 ticks, you scale half of your trade out. Take it out. Now, I don't scale like that. I do scale, but take half your trade off the table, let the other 5 run, move your stop up 10% above your entry and let it run to the hills. If it stops you out later on, it doesn't matter. You made profit off the trade. What I do with my trade is that I would take, and let's say I'm trading 25 SPY contracts. You know, that's easy to do. And then I'll take, and when I'm in profit 30, 40%, I'll take 15 of my contracts and put a stop in at a profit target somewhere up in there around 20 ticks into it, 30 ticks into it. And then I will have that there. So if it pulls back anyway or show weaknesses, it automatically take that part of the trade out and let the other 10 run and let it run automatically for me. So you don't necessarily have to cut it, but make sure you have a scaling process in place. Some people will say at 10%, I'm going to take 30% of my trade off. At 20%, I'm going to take another 20% off, and then I'm going to let the other 50% run. Some people will say I'm going to take every 10% of the gain, I'm going to take 10% off, 10% off, 10% off. And at the end, I'll let 2 run. But whatever that is, this is strategy, guys. I'm strategizing on my profit taking. I'm strategizing on my entry. I'm strategizing on my exits. I'm strategizing on my scaling. And all of this is part of your day trading strategy. Because if you don't have a strategy in your trading plan, guys, you're going to lose. You just are. You're going to lose. And you're going to have red days. I think it is possible to have days that are not red. In fact, I'm working with one gentleman. He's my star pupil. He's got out of 6 weeks, I think he had 3 red days. And he has, when I met him, he never had a red week, never had a 100% day, never. Red most for the year. And he's at 6 weeks with only 3 red days. What can I say? Now, is it me? No, it's not me. I taught the principles, I taught the skills, but he's doing the execution. The things that I taught him here at the coaching institute, boy, that's gonna sound good. With the coaching is that he followed the strategy. He did exactly what I showed him that I was doing, and he's so precise at it. And listen, his confidence level is through the roof. He have no trouble. In fact, today we was talking, and I took a trade. I took a loss on it, and guess what he did? He gained on the trade. I went long. He went short. He made money and I didn't. I said, wait, this is my student. I'll trade him in here. But it's just see how he viewed the market. He had his own trading style. I have my trading style. He have the same information, the edges that I teach, right? But he saw something that I did not see. He made money and I lost money. And now, I'm just being honest. I'm telling the truth. But That's the way it is, because when you have your strategy and your plan, you can make decisions, not what the herd is doing, but what you see the market is doing for you. And every trader must have a strategy and a plan. The next thing I would say to you is that make sure you have your time that you're going to stop yourself out. Now, what does that mean? I know the market moves violently at the top and bottom of the hour. If my trade is running and I'm coming to the bottom or the top of the hour, I'm expecting the market to do something different. Pull back, bounce, run up, and so forth. So I am ready to cut my trade or take most of my trade out at the change of the half an hours. So it's 29 minutes after, I'm taking 90% of my trade off, let the other two. If it breaks that threshold, then I'm willing to go in and take another strike and go back in again with a brand new trade. But I've seen so many times that market will move to a certain level and then violently turn around and drop. Just like this morning at 5:30 California time, it hit this mark, and at 5:36, it violently dropped. You couldn't even anticipate it, but it was time and levels. So time is very important. If you find yourself in a trade around changing of the half hour marks, be sure to cut your trade, or be sure to put your stops in place. Be sure to have an exit strategy or scale out of your trade before it gets to that area, because you're subject to have a reversal on you. Okay. Now, this is how you develop a profitable trading strategy for yourself. Okay. Next, I will give you is this here. I want you to, these are affirmations, and you guys need them, I'll give them to you. I want you to have this in your mind, because see, what you say when you talk to yourself means a whole lot. Okay. I'm saying it one more time. What you say when you talk to yourself means a whole lot. What does that mean for you? That means that you have to know your disciplines. You have to know when you're going to enter, and you can't be saying things to yourself that is inconsistent with you being a winning trader. So one of the things I do every morning, I use these affirmations myself. I say to myself, I am a consistent winner because, why, Kelvin? Why are you a consistent winner? I have to tell my subconscious mind, get ready to make some money. Get ready to win. Line yourself up. I don't care how you're feeling. Get with the program, because we're going in this market to take some money out of the market. I see traders time and time again. They have this, well, I always lose. Every time I take a trade, it goes against me. They have this poor self-image. And when it comes to trading, you have as much right to take profit out the money as market as any trader out there. You have a right, because you're a disciplined trader, to extract money whenever the market presents itself to give it to you. But your discipline is the bridge that breaks down the gap. Your discipline is the bridge that breaks down the gap from being a non-profitable trader to a profitable trader. So what are my edges? 7, I'm going to give it to you. What I say to myself, not much my edge, but I objectively identify my edges, meaning that I look at them without bias. Now, you will hear me say that I have a bias to the downside, but you would also hear me say 50-50. Which way it's going to go, I don't know. It keeps myself open to take the market going up or down, no matter what my bias tells me, no matter what I'm thinking about, but what is the market telling me, so I can look at it objectively. Make sure, and I'll say I, because I'm talking to myself now, I predefine the risk of every trade I make, meaning that I know when I take this trade on SPY, it requires at least 25 ticks for me to stay in this trade. I know I need to hit it at the right time when I have full time frame continuity. So I predefine my risk. I want the most favorable turn. So when it's moving in the direction I want to go, then I push the button. It pulls me in the trade, and I'm up 2 or 3% when I push the button, versus being down 2 to 5% when I push the button. Have that happen to you guys, where you take a trade and instantly push the button, and you're down 3 or 4%. People, and I hear people say this here, oh, I'm down because of the spread. No, you're not. You're down because you pushed the button and the trade was going in the wrong direction. That's why you're down. Okay? You can avoid that. Clearly predefine the risk of every trade and precision when you're pushing that button. Next thing I say is that I am completely accept the risk, or I'm willing to let the trade go. I said it earlier today. The trade was running, and I knew that if I chase this trade, chances are I'm going to have to put a too wide a stop on it to stay in the trade, because it may be pulling back, because once it's running, market never goes straight in one direction. It goes up, down, it goes in a zigzag. And that right there is a lot of times we push the trade, pushing the trade, a good trade on a pullback, get stopped out and the trade run to the hills. That's because we haven't clearly defined our entry. So make sure you know the risk before you push the button. Okay. I only act on my edges. I act on my edges without reservations or hesitation, meaning that when it hit my level, I push the button. I don't say, let me see if it's going to work out first. Have you guys ever did that before? Do you ever find that to be a problem when you hesitate on your trade before you push the button? Anybody chat in the back chat box if you have. Have you ever hesitated on your trade before pushing the button? And everybody should say, yes, I have. Come on. Tell the truth. Shame the devil. Yes. Countless times. And this is what I'm going to say to you guys. Clearly define your edge. Once you clearly define it, then that's your actionable signal. And when that signal shows up, you just push it like a robot. You can't control where the market's going to go. You cannot predict the future. I can't. Nobody can. But all you can do is take the trade, know your predefined risk, and be willing to take the risk. And 9 chances out of 10, you are right what you're doing, but your hesitation puts you in a trade when on a pullback, and it causes the trade to self-sabotage itself because of the fact of the delay and you taking action on your actionable signal. The next I will say to you is, to myself, I pay myself as the market make money available to me. What does that mean, Kelvin? If that trade runs up, here it is, 10%, hear me out, and it starts to come back to me at 5%, my hand is on the button, and I'm probably going to get out before 3 to 2%, and I will cut the trade and make a red trade. Now, what does that mean? The trade may still run. I just may have to take another trade. But I know psychologically, if I let that trade go against me and turn red and I get out of the trade, it's going to affect me on my next trade. I'm going to hesitate. I know if I let that compound 3 times, like today, this morning, 3 times I lost and 1 winner, it did not affect me, but it did. Guess what I did? I stopped trading. I reset. I walked away. Why? Because, when you're trading 25, 30 contracts, man, and you making repeated mistakes and mistakes, them losses add up. And psychologically, it affects your ability to make the next trade correctly. So I'm giving you instructions today. Your coach, Coach Kelvin, when that trade is up 10% and it starts coming against you, if you cannot trade no more that day, guess what? You don't trade no more that day. But you in every day green. If that trade goes up 10%, you need to be green. If you are red after 10% trade, you need to stop trading, maybe a paper trade for a little while, and get your disciplines together, because your disciplines are going to sabotage your account and your ability to grow. I was speaking about the trader that was red consistently when I started coaching with him. And you know what changed? This is what I'm telling you right now today. He started taking 1%, 2%, 3%, 5%. Now he's taking 10%, 20%, 30%, 100%. I think he had a 200% the other day. But you know what happened? Psychologically, he shifted. He became that consistent winner that he was speaking about, because consistency breeds confidence. You ever see a LeBron James, one of these pro basketball players, and they're shooting the ball, they're doing their thing. You know why they're so confident? Because they're consistently winning. And they believe they can jump across the Empire State Building because they consistently win. The same with your trading. As you consistently take gains, and this is what I want to say to you right now also. Don't ever say, I'm small green. Oh, I'm small red. No, 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 no. When you say small green, small red, your subconscious mind says, oh, okay then. Then you small green, small red, then we're going to keep you that way. Or they say that that's all you deserve is small green, small red, because you do it every day. Your subconscious mind will line you up to make bad mistakes. So what you say is, I'm green, and you pat yourself on the back and say, I have great risk management skills. The trade was coming against me. I did capture 3% of the market. Great job, Kelvin. Great job, Mike. Great job, KJ. Great job, JR. Great job, Aisha. Great job. Great job. And that's what you're going to do. Because when you keep doing that, your subconscious mind process information, says, oh, I'm doing a good job. I made gains. Good job. I kept profit. Good job. Yes, your subconscious mind. Reinforce that behavior and keep you in a position of making money every day. It's a psychological game, guys. I don't know how nobody gonna say it. It has skill. It uses technicals, but it's psychological. 90% of your wins or your losses is right here in the mind. So you start setting yourself up for winning on your trades. Make sure that you pay yourself as the market make money available for you. My other thing I say is that I continually monitor my susceptibility for making errors. I made 3 today. That was too many for me. I don't make 3 errors in a row. What did I do? I stopped trading. Not for the day, just to get a reset. Because I don't want to build up on that bad habit, because that bad habit will perpetuate into my Monday and my Tuesday, my Wednesday trades, and that cannot be. I'm a green trader. I had a guy ask me just the other day. He said, "Are you ever red?" I said, "Yeah, I have a few red days." Like a few, but I don't have, and they're not big days, but I don't have many red days. Why? I'll take 1%, 2%, and my goal is easy. I only want 10% of the market. A lot of times it gives me more, but I only want 10%. So I'm not greedy. I'll take 1% all day long. I'll take 2% all day long. And if you're a trader that's willing to take it that way, guess what? That's going to be reinforced good behavior for yourself. The 7th thing is going to be, I understand it is absolutely necessary. I understand the absolute necessity of these principles that I just quoted of consistent success. And therefore, I never violate these rules. If you do that, guys, I tell you that your trading game is going to change. Everything I spoke to you about was very fundamental things. So I'm going to recap what I gave you today. We'll open up for questions. 1, make sure you have a clear plan to approach your trading. 2, do not trade 25 different items. Yeah, they all may be running. Find 3 or 4 of them that has volatility and become a master of them few tickers or indexes that you want to trade. 3, make sure you clearly understand time frame continuity. 4, make sure you look for your trades around the top and bottom of the hour. If you're a new trader, go to the higher time frames and choose them to make your decisions, but use your lower time frames to execute your entries. Okay. 5 was understand your risk dynamics. Meaning, what is your portfolio size, and determine your risk tolerance, and only take trades that lines up with your tolerance. And some trades you have to pass on with a small account. And then when you take your trades, make sure that you clearly understand the flow or the dynamics of how the market runs. And with that, guys, I think that you're going to be a very successful trader. I think you have everything that you need to win at this game. It is truly up to you, or whatever it is that you're going to do. It is truly up to you. I'm Kelvin Verrett with DC Coaching. I coach traders to take their trading to the next level, to help you supercharge your trading. So at this point here, we're going to say, see you. Go to dominantcoaching.com and check us out if you want to look at mentoring or trading. And at this point, see ya.